Hi everyone, welcome to this month's EVO eNews. I'm Dave O'Brien.
And I'm John Clare. We hope everyone out there is doing well. We're sure you're aware that this has been a tough year in markets, and we're going to share our thoughts on this topic after two quick updates. Jessica and Stephen, take it away.
Thanks, Dave. You've probably heard by now that Charles Schwab recently purchased TD Ameritrade, one of our custodians here at EVO. Things have been business as usual for some time, but we expect to finally see some changes later this year. If you have accounts at TD Ameritrade, we'll contact you this summer to talk about some changes coming your way. So stay tuned.
Thanks, Jessica. Next up, we wanted to provide a quick reminder that our special video on Medicare should be available by the end of the month. We'll share that link so you can watch it whenever you'd like. It's a great primer on Medicare in general, so whether you're already on Medicare or will be someday, there will be something for everyone. We can't wait for you to check it out.
Thanks, guys. So let's talk about markets and the economy. It's been a difficult year for investors to watch. Volatility's been up, stock and bond markets are down, and it could be bumpy for some time. Some investors even feel compelled to just do something as a result. And while an emotional reaction is certainly understandable, we think it's likely best to pause and consider whether that is actually the prudent thing to do. Just remember that the worst and best trading days tend to happen together. Just look at Tuesday and Wednesday of this week as an example. So just holding on during these periods of difficulty is usually the best solution. Dave?
Thanks, John. A lot of people are asking why we're touching bear market territory after the great run over the past 2 years. So how did we get here? Well, first, rising interest rates are likely the biggest driver. There are also valid concerns about inflation, the chance of a recession, and other global risks. Also, in the wake of COVID, several factors combined to create a classic case for inflation to mount. Demand rose, supply dropped, and the federal government injected significant stimulus dollars through multiple COVID relief packages. And of course, limited global oil production capacity. Fuel prices have a magnified impact on inflation. So what, if anything, should you be doing about this? Consider the following.
First, let us know whether your personal circumstances have changed. If so, do you feel like your appetite for risk has changed and warrants a strategic change in the way you invest your money? Are your goals still in reach? Next, remember that staying the course doesn't mean doing nothing. It still requires action. Here are some of the things that we're doing for you at EVO. Dave?
Thanks, John. Well, of course, rebalancing your portfolio. We always work to maintain the level of risk exposure that's right for you. This allows you to capture the fullest amount of growth in your portfolio when markets turn upward. And this is shown to be a valuable approach to investors through all market cycles. Delivering tax efficiencies is another. We look for opportunities to reduce your tax bill, offset realized gains, or using the opportunity to perform portfolio cleanup like concentrated positions or high-cost legacy positions. Or finally, considering Roth conversions where appropriate to save you tax dollars on the road ahead. At EVO Advisors, we will continue to focus on your ability to meet your goals and hope you view short-term returns in the appropriate perspective. John?
We hope this has helped shed light on our thoughts as your financial planners and as investors ourselves during the investment landscape we've seen so far this year. We're always here if you want to talk. We hope you have a great start to summer and look forward to seeing you next month. Until then, take care.